Hi guys, a very good afternoon and welcome to the CNBC TV 18 Mumbai newsroom. I'm Pavitra Parekh. You guys are tuned into your stocks, the last one this year, and the market in the past few minutes has definitely seen a little bit of a slip from that, green territory that we were seeing. We're currently around 20 points in the red. You're seeing cut come through in the banking names as well, and the Nifty Bank is currently down around 240 points. So there has been an over 100-point slip in the Nifty Bank in the past hour or so. It is a mid-cap index which is still holding in the green, so that one is seeing a gain of around 200 points, but there's definitely been a slip that has come through on the key indices over the past few minutes. We're going to talk about the market action in a bit, but first up, let me invite our guests on the show today. We have Rahul Sharma, market strategist and head of research and development at Equity 99 Advisors, as well as Parthiv Shah, director at Tracom Stock Brokers, to answer all of your stock-related queries. Gentlemen, good morning, and thank you very much for joining us on this final episode of Your Stocks for the Year. We have lots of queries coming in as always, and I'm going to get to them right away because lots of people have written in. So the first one comes in from Mukesh Jain, who writes to us from Ooty. He says he holds 50 shares of Wipro bought at rupees 300. He's a long-term investor and he wants to know whether he should hold or whether he should sell the stock. This has not been the year for IT, of course. We've seen the kind of cuts that have come through. Wipro itself is down around 45% for this year, but he did get in at 300. So from those levels, he's definitely still made good money on this. Parthiv, let me come to you. He's saying he's a long-term investor. Do you think with a long-term perspective, this is a good one to hold?
Good afternoon, Pavitra, and wishing you all a very happy new year in advance. See, Pavitra, I think unfortunately you are absolutely right. IT was not the year for investors. In fact, this year eroded a lot of wealth in IT, and probably I think the main reason being the valuation. And all of a sudden, the macro headwinds which kind of caught up the sector. And Wipro itself, if I'm not wrong, I think was down year to date in terms of percentage almost by more than 35%. So that's a huge wealth erosion. But yes, as you rightly pointed out, luckily in terms of the valuations, I think the gentleman has entered at reasonably good valuations. Probably the valuations at current levels are quoted at around 17 times, which if I compare as compared to the other peers, especially likes of TCS and Infosys, it's quoted a lot lower. But I think there are reasons behind it. If you see the consistency of constant currency growth in Wipro, that has been lagging its peers, despite the fact that this company has been very aggressive in terms of even the inorganic front, and management has constantly talked about the fact that they're ramping up those capacities and also getting in new mining in new clients. But again, the performance has been a little lackluster. But I believe that from these levels, I think there's no point exiting here. I think you can certainly wait out, because come next 6 months, as and when the acquisitions ramp up, and more importantly, I think Wipro has done a lot of rejig in terms of its management, a lot of rejig in terms of how it mines its clients. I think if it is able to perform industry kind of benchmark performance in terms of constant currency, improvement in margins, then probably it has a huge scope of re-rating. Plus, there's always this chatter about the additional cash flow generation that these companies do to be returned to the shareholders in form of a buyback. And if at all something like that happens, the investor will get a better exit. So that is what he should eye on. So hold on for the next 6 months to 12 months.
All right, hold on for the next 6 months. That is the call on Wipro. Let me also get Rahul in on this one. Rahul, how is this looking from a technical perspective? Do you think that at least for a few more months, you should hold on to this one?
Good afternoon, Pavitra, and I should wish you and the team as well as our viewer a very happy new year. And coming back to this query of Wipro, I think I would agree with Parthiv here. There is no point of exiting or taking any other action right now. I think Mr. Mukesh should hold on for this Wipro for long term. I think there's a strong support which I can see on the charts at 370 levels. And I think coming months, as Parthiv said, IT Pack should perform, and Wipro is a strong potential candidate, and so is Infosys and TCS from the same pack. So I think he should really hold on for Wipro for coming months.
All right, hold on to Wipro for the coming months. By the way, the high for Wipro, remember, was over 700. So from those levels, it's corrected a lot. But, this has not been the year for IT. So maybe in a couple of months, things could look different, like our guests were just pointing out. So that is the call on Wipro. The next query comes to us from Shashank Kumar. He writes to us from New Delhi. He holds 7 shares of ITC, which he bought at the price of 290. He says he's a medium-term investor and he wants to know whether he should hold on or whether he should sell at current levels. By the way, our ticker team is flashing interesting lines at the bottom of your screen on how the market has fared, and ITC has been one of the top 3 gainers on the Nifty this year. After, a long period of not doing much, this stock has really performed this year. So let's get our guests in on what they think about ITC from these levels. Rahul, no two ways about the fact that ITC has, really given solid returns this year. How is it looking from here on? Do you think there's lots more, potential upside here?
For ITC, I would rather say to accumulate more on lower levels, and it will require hard patience as well. Not every year will be the same as 2022 has been for ITC, where we are seeing huge rally in the stock. But no doubt to keep this stock in your portfolio for long term. I think this is a great company to hold on in your portfolio, which also adds dividend value each and every quarter you passes on. So I think ITC should really be in your portfolio.
Okay, ITC should be in your portfolio. Parthiv, do you agree this one is one for the keeps?
I absolutely agree. One good thing about ITC is that despite it makes investors wait for quite long, but it does tend to give a very juicy dividend yield. And we know for the fact that this is a giant which doles out almost 12,000 crores of free cash flow every year. A lot of it is paid as dividends also, and a lot of the money that the company generates internally, thanks to the cigarette business, is reinvested into the FMCG business. And of late, we are seeing very reasonably good traction in terms of the FMCG business and all the internal therein. And more importantly, as and when this distribution capex for the FMCG is scaled up, I think there's a very good chance that ITC can improve its margins in the FMCG segment, which is also becoming a very important vertical for it. No doubt the hotel business, the paper business, all have done extremely well of late, which are all catching up. But again, we know for the fact for now the key business is the cigarette business, and so far no major tinkering in the taxation there, which is giving a lot of respite to investors in ITC. Even here the stock is quoted at around 23-24 times as compared to many of the FMCG companies which are quoted at 35-40 times. So I believe that ITC can still do well from here, and the investors entry point has been quite good and sitting on a very good dividend yield. So my suggestion would be to hold on to this company.
Okay, that makes it easy for our viewer then. Both of our guests agreeing that ITC is something that you should hold on to and have in your portfolio. The next query comes in from Mahantesh Gogi, who writes to us from Pune. He holds 60 shares of Stovecraft at 581, 201 shares of KCP at 121 and 151 shares of Chambal Fertilizers at 349 rupees. He's a long-term investor, so he's willing to hold for a while, and he wants to know what he should do with these investments and if they're likely to pick up. Let me come to you on this, Rahul, because for all three of these, he's really not seen a return. There is a little bit of a loss on all three of these counters. Do you think the tide could turn?
Firstly for Stovecraft, I would say on the technical charts, it is in the corrective mode and no sign of reversal is present at the technical charts. So I think he should take exit from Stovecraft at any bounce he gets. Major support is placed at around 478 levels. If it breaks, then huge losses might occur. So I think he should look out for an opportunity where he could see any bounce in this stock. He should take exit. Secondly, about KCP, particularly volumes are very low, although it is not a big ticket size stock, but volumes are generally low with a market cap of just 1,450 crores. Technically, it has been taking support from its 200 DEMA on weekly charts, which is currently placed at 103 rupees, which will act as a strong support. So please take exit at any bounce. Upside resistance is placed at around 127 levels. So I think look out for an opportunity to exit at any bounce he gets. And for Chambal Fertilizers, finally, I think this is a good stock to hold for long term. If we compare Chambal Fertilizers to other fertilizer stocks which have performed really well, this has not performed that. And I think the charts is also suggesting that he should hold on to this stock. It is having a big support line near 275 levels. So keep stop loss at 275 and accumulate more on declines. For a long-term perspective or a horizon, I think target price should be placed around 450, keeping 12 to 18 months of time horizon.
Okay, got it. Let's also bring Parthiv in on this. Parthiv, my team is alerting me that you're not tracking Chambal, but if you could take us through your call on the others, what do you think of Stovecraft, KCP at these levels?
In case of Stoker, no doubt the stock has massively corrected from its peak valuation levels. And I recollect, during the IPO, the valuations were quite rich, post which I think the stock had a decent run up. And always it was looking optically very, very expensive as compared to a lot of its peers. Now, if you see the business model of this counter, basically it's into kitchen appliances and home appliances. And kitchen appliances form almost 85% of its sales. And it hinges a lot on this Pigeon brand that they have. But again, if you see, it's not a premium category brand, and the kitchen appliances segment has a huge competitive space. Even companies like Stowcraft have started to shift into more value-added and more premium products, and also they're cutting down more on the government side of the order so that their margins can improve. And there has been some improvement in the margins, but overall, because of a very competitive landscape in this business model, we are a little skeptical. It's quoted at around 31 times trail, 31 multiple in terms of trail multiple, and forward, if I see, it's around 28 times. Not the most attractive valuation also here. So I agree one can exit Stowcraft here. Talking about KCP, I think we are upbeat on this counter for the next year, especially because it has a 4.3 million ton cement capacity in Andhra Pradesh. And it's a very well-run plant, and we believe that the fortunes of the cement industry can do extremely well next year. And especially generally pre-election year, we believe that there'll be huge government spending, which will drive volumes for the cement players. And also thanks to the fact that the freight costs are slowly coming down. Not only that, the fuel costs also are getting rationalized, and all these companies have got some sort of price hikes of late. So that will be helpful in terms of maintaining their margins. They also have a 24% revenue contribution coming from the sugar business from Vietnam, where the cash flow generation is reasonably good. And I think this is a good counter available at very good valuation. So give it a year's time, probably the investor can get good exit points from here.
All right, thanks a lot for taking us through all of those, different stocks that we just asked you about. But the next query comes in from Narayan, who writes to us from Bangalore. He holds 60 shares of Lupin, which he bought at 890 a piece. He purchased these around a year ago, is what he says. He's a medium-term investor and wants to know whether he should hold or sell the stock at current prices. Parthiv, Lupin has definitely not done well this year, but the pharma pack is also, it's not been the year for pharma either. It's down around 22% in this year itself. Do you think that from a long-term perspective, this is not a bad one to hold?
See, Pavitra, I think Lupin, not only this year, but since many years, I think it's been lacking the consistency that it once used to have in the past. And it was plagued with a lot of compliance issues in its plants. Not only that, I think we saw huge margin erosion happening because often a lot of its products in the US markets where at one juncture they had a reasonably good market share. There was huge price competition and huge price erosion, which led to a lot of decline in their margins. And despite, I think, a lot of new products that they're talking of, the company has been lacking in terms of trying to ramp up its high margin products or the specialty pipeline. So I think the pharma pack, we believe there are a lot better names. We have been liking JB Chemical and Pharma, which has been a good play in the domestic segment. They've been acquiring good brands, and no doubt it has a recent run up in the stock, but I still believe that given next 2 to 3 years, this is the counter which can do a lot better than Lupin.
Okay, so Lupin is not looking too good, but maybe JB Chem could be a better pick in its place. Rahul, coming to you on this one, what do you think of Lupin? The high for Lupin was above 2100. It's less than a third of that price right now. Do you think that kind of level can be made up, even if you hold for a long term?
It will be like taking a huge patience over there. I think he should wait for now because he has already been waiting from last 1 year, and no point of exiting after such long period. Stock has taken support at 600 level after a heavy sell-off and correction, and now between 690 and 700 levels. It might consolidate more, so remain invested with patience and hold the stock. I think, but there is no sign on technical chart that it will ramp up and give us a huge rally. But if you sit out with patience, then you may convert this particular trade on the positive side.
Okay, that is the call on Lupin. With that, Rahul as well as Parthiv, I request you to please stay on for a bit. We just have to take a quick commercial break, but we're going to be back in 2 to take all of your queries. Hey guys, welcome back. You're still tuned into Your Stocks. The market is once again back in the green, but absolutely flat right now. So just about managing to trade in the green. It is the Nifty Bank, where we've seen quite a recovery. So if you can just pull up the Nifty Bank, you'll see in the past 10 minutes that we have been talking, there you have it on your screen. It has recovered around 90 points from the lows. The mid-cap index is what is doing well as well. Now it's moved up even more, around 0.9% in the green. But let's get back to our queries now. We still have Rahul and Parthiv with us to take us through all of your queries. Malik writes to us from Chandigarh with an investment query. She wants to invest in tech stocks like HCL Tech, Infosys or TCS. But considering the downside in the sector, she wants to know whether she should buy into tech or she should look at some other profitable sectors like banks. This is an interesting question. Parthiv, let me come to you on this. I guess the question is there more steam left in the banking space and should you get into that? And also on the other hand, do you think that the downside and the worst of the IT cuts have been seen already?
See, firstly, on banks, certainly I believe that we are at a good inflection point in terms of a great credit cycle, credit growth cycle. And looking at the current setup of a lot of banks, whether we talk of private sector banks or public sector banks, I think a lot of cleanup has already happened over the past many years. They're sitting on good provisioning coverage ratios. They're sitting at very good, healthy NIMs. And now I think they are again ready to start lending because the capital adequacies have gone up on the board. And more importantly, what we are witnessing is the data from RBI that the credit growth has started to inch up upwards of 15%, which is a very great indicator for a lot of banks who are very aggressive in this space. And a lot of the frontline banks, especially the private sector banks, names like Kotak Bank or an HDFC Bank or ICICI Bank, I think they are front runners in terms of garnering and taking a lot of market share from a lot of their public sector peers. So I believe that these banks should do well. Even in the public sector space, I think names like SBI or for that matter, Canara Bank, I think they are also the ones really looking good. They're still less expensive as compared to the private sector peers, and they are playing a very good catch up. So I think next 2 to 3 years, a basket of these stocks in the banking space, we believe should do very well. Talking with the IT sector, I think it's a good time to start nibbling into the frontline IT names because even in the frontline IT names like TCS, Infosys, or HCL Tech, we have seen very healthy correction from the peak. No doubt the valuations have become a little attractive, but yes, there are some headwinds in terms of growth thanks to the developments of the macros for FY24, where there is a lot of talk of soft landing, etc. But I think all these companies and their managements are pretty confident that there's a good structural story building up and the order pipeline and the deal pipeline looks good for them. And they will be able to match up with the constant currency growth guidance that they've guided for. So valuations are good. They are huge cash generating companies and they give good dividends and buybacks are always there, which adds up to the ROE. So I think it's a good idea to start nibbling into these and have IT as a sector as a part of the portfolio allocation.
Okay, you can start nibbling into the IT pack as well. That is, how you would see the banks and IT debate. But Rahul, coming to you on this, banks versus IT, if you had to pick one, tell me which sector you would pick, and then also, take us through a few picks in each of these.
No, then also, I think it will be really difficult. Both the sectors are good and and will be on the focus of the market in coming days. Banks, which Parthiv just mentioned, from the private sector, I think ICICI Bank and Axis Bank will be doing good, as well as Kotak Mahindra. And talking about the PSU segment, I think Canara, as Parthiv said, is really good. Bank of Baroda, SBI are some of the stocks which should be can perform really well in coming days. And then IT, as I said earlier, specifically as Ms. Malik wants to know, see, I think Infosys will be my top candidate from the list. On technical grounds, the downside is very much limited as it has a support near 1500 levels. And the upside room is really large. I think it is a good time to enter and start accumulating the tech stocks, and especially Infosys. And even TCS is having a limited downside as it is having a strong support levels which are placed at 2950 levels. So I think invest in both TCS and Infosys and some part in PSU and private banks. That should make really good returns in coming days.
Okay, got it. That's very helpful on banks as well as IT. But moving on, the next query comes in from Jaykumar Sanjeevan, who writes to us from Tamil Nadu. He holds 1 lakh shares of Suzlon, which he bought at 9.55 rupees. He's a long-term investor and wants to know whether he should hold or sell. Rahul, on the charts, how does this one look, Suzlon Energy?
No, I think he should definitely hold on. There is a major resistance near rupees 12. And once it crosses this resistance level, stock is likely to go upside near 13 or 14 levels. Keep a strict stop loss near 9 rupees and keep trailing it as it goes up. and I think Suzlon should do in coming days.
Okay, that is a hold on Suzlon. Parthiv, is it a definite hold for you too?
Yeah, I absolutely agree with Rahul. The fortunes of this company of late have changed. No doubt, long way to go for further better execution in terms of how it plays out. But if I look into the balance sheet of this company, I think from huge debt levels of 13,000 crore, including the recent rights issue through which they raised a lot of money, no doubt equity was diluted. They're currently sitting on debt of around 2,200 crore. The order book has been ramping up, and this is one company in the wind space where I think they have very good backward integration, whether it is forging, whether it is into rotor blade manufacturing or the turbine towers, everything. I think they do everything in-house, and that helps them to be very cost efficient. They had huge execution all world over, and I believe that there could be a change of management here. But overall, I think it's a good setup, and I believe that one should give some time to this counter. I believe that going ahead, we can see better upsides from here.
Okay, can see better upsides from here on Suzlon. So both of our guests agreeing that this one is one to hold. But with that, Parthiv, Rahul, I'm going to thank you. Thank you very much for joining us on this edition of Your Stocks, and wish you a very, very happy new year until we speak once again, in the coming weeks. But with that, we're completely out of time on this show. Thank you guys for tuning in. And remember, you can email us all of your queries. We will continue to take them up with our guests. And stay tuned because closing bell comes up for the last 1 hour of trade for the year.